I have been investing my money in the stock market for the past 5 years, and if I were to start over, here is exactly what I would do. So let's talk about why you should invest in the stock market, how you can start investing no matter where you live, how you can easily set investment goals and meet them, and how much you need to invest every month to reach that goal. But before we get into that, why exactly do I invest and why do I want you to do the same? Better understand this. You would have to watch this video to the end because you will get to see my investment performance over the past 5 years, and then only you can decide if this is something that you want for yourself. Number one, beating inflation. Cost of goods and services are on the rise globally. And if you only leave your money in a bank account, you will lose money over time. And here is a simple way to think about this. As things get expensive every day, and your income does not grow as fast as the price of goods and services, you will be unable to buy today the exact same thing that $100 could buy for you 5 years ago. And to be able to manage this kind of situation, you have to find a way to earn more money, and investing is one of the way you can do that by simply allowing what you already have to work for you. Secondly, retirement planning. You do not want to run out of money, particularly in your retirement years after you have stopped receiving income from your job. Some others want to retire early. If you want to know more about this, look up the FIRE movement. But in a nutshell, FIRE stands for Financial Independence, Retire Early. And this is a concept where people start out early. They save and they invest aggressively in the early years of their career. And the plan is to be able to stop working years before the traditional retirement age of 65. And there are a lot of people who have been able to achieve this in their late 30s and early 40s. These people are usually high earners, by the way. The most important thing, however, is that one, they started early, and secondly, they stayed consistent. Do this and you will watch your $200 a month contribution compound into hundreds of thousands of dollars and possibly go over $1 million. How do I start investing? The first thing you must do is to choose a broker. This is a company that gives you a platform to buy and sell stocks, ETFs, bonds, and other assets that are traded on the stock market. In Canada, we have plenty of them. You can do this through your traditional bank like RBC, CIBC, TD Bank. But the most popular ones here in Canada are Wealthsimple and Questrade. And I personally use both of them, and with good reason. If you are still conflicted about either letting your bank manage your investments or doing it yourself with brokerages like Wealthsimple or Questrade, then I want you to remember one thing. When it comes to investing, the person who is able to keep their costs low will win 100% of the time. It is cheaper to do it yourself rather than investing in mutual funds through your bank. That is an expensive way to invest as a retail investor. If you do it yourself, you also get to learn along the way. Financial literacy is now a must life skill to have in 2026, and you need to know the basics of how money works. Wealthsimple has over $100 billion in assets under management. They are CDIC insured up to $1 million, and they are trusted by over 3 million Canadians. Questrade, on the other hand, has over $75 billion in assets under management. So if you are concerned about losing your money is safe and they can be trusted. If you want to sign up with either Wealthsimple or Questrade, please feel free to use my referral links in the description below. After signing up and filling out your personal information, including your SIN number, and going through all the verification process, you can then transfer money from your bank to your Wealthsimple or Questrade account using any of the methods available, and then you can start investing. However, remember that just depositing your money into your investment account does not mean you have invested your money. You have to actually buy a stock or ETF or any other commodity that is listed on the brokerage platform that you decide to go with. People still make this mistake in 2026, so please don't. And you can do this by going to the search bar and searching for the ticker symbol of the stock or ETF that you want to buy. I am using Wealthsimple for this illustration. Toggle between buying in dollar amount or number of shares. I usually go with the dollar amount I put in how much I want to spend, click next, and then place my order. Wait for the order to be executed, and that's it. You are now invested. Everything else is rinse and repeat. You can continue to do this every month, bi-weekly, or at whatever frequency that works for you. But the best thing that you can do is to automate your investments. You can automate how much money leaves your bank account at a set interval into your brokerage account. And you can also automate what stocks or ETF you want to consistently buy on a monthly or bi-weekly basis. You can also do this in pretty much any brokerage of your choosing. This is exactly how I was able to build an investment portfolio that is now worth over 120,000 Canadian dollars in 5 years of active investing. And I did this while earning an annual income of less than $50,000. Setting investment goals. I am a long-term investor, and I encourage you to have a long-term mindset when it comes to investing and wealth creation. Do not chase every hot stock that people talk about on TikTok, Instagram, or even YouTube. Just pick a strategy that works and stick with it. Invest in low-cost ETFs that track the performance of an index like the S&P 500 or the Nasdaq 100. If you live in Canada, the ticker symbols for the ETFs that I mentioned above are VAV and QQC. These are the only ETFs that I hold in my investment portfolio. So over 60% of my investment portfolio are just invested in these two ETFs. Watch this video to see more. If you are looking for an all-in-one ETF portfolio and you live in Canada, check out the XEQT ETF. You can comfortably invest in this ETF and never worry about anything else. And this is because this ETF provides a decent level of diversification. This ETF contains 4 other ETFs inside of it, and your money will be spread across multiple markets, not just US and Canada. If your investment goal is to have $1 million at retirement to support your old age benefits from the government, then do a quick Google search for a compound interest calculator and simulate how much you will need to invest monthly or bi-weekly to be able to achieve this investment goal. I particularly like this one from calculator.net. Use the how you can save for retirement calculator. I will also leave a link in the description of this video. Put in your current age, planned retirement age, how much you want at retirement, how much you already have saved for retirement, and then use an average return of 10% because this is a reasonable expectation based on the past performance of the US stock market or the S&P 500 index. Click calculate and you will see a breakdown of how much you need to save every month, how much you would have contributed in total, and how much interest you would have earned if everything went according to plan. I want about $1.5 million at retirement. My target is to retire by 55 or 56, and I will need to invest about $1,000 every month to be able to achieve that goal if everything goes according to plan. This is how you can build something that affords you the option of choosing if you want a comfortable retirement or if you want to work until you drop dead. The choice is yours. That is it for this video, and if you enjoyed it, please like, consider subscribing to the channel, and I will see you on the next one.